Stacks here at Royal Financial Investment Group, making a quick video for you guys today to show you guys. The title of the video is going to be how to invest or bet against the U.S. market. Again, this video is going to be about how can you invest against the U.S. market. So don't forget to hit the like, subscribe, comment button, share all of the good stuff below. Give me a thumbs up, thumbs down. But if you're going to give me a thumbs down, let me know why. You don't have to, but sometimes I see that, oh, what did the person didn't like about the video? So if you want to let me know why I suck, let me know why, and so I can get better, right? So anyway, let me jump straight into this video. So the reason why I made this video is I want to let people know, over the last month or so, we've seen the Dow Jones lose over 1,000 something points. Now we're down sitting around, the Dow Jones is 16,102. So a lot of people see that and they say, oh man, what happened? Like on Friday here, the numbers they're showing, the Dow dropped 200 points. So some people are like, oh man, the stock market is the worst investment ever, it's all manipulated, all this other stuff like that. But what I made this video for is to show you that, hey, you can make money on the downside as well. Actually, you can make more money on the downside than you can from the upside. Most of us know about, hey, we buy, we hold it, we watch it go up, that's it. But you also can bet against the market. Also, betting against the market also gives you a hedge. A hedge means protects you. Let's say you have a portfolio full of blue chip stocks, the Dow takes a crap, and then now you are, some people try to sell off real fast for a loss or whatever, but you can buy something that, hey, you can make money on the downside. So I don't want to talk too much about it. I want to get straight into it. I want to make this video under 5 minutes, so I'm actually timing myself. So anyway, let's get to it. So the first one we're going to look at is the stock symbol is called SDOW. SDOW is the first one. It's an ETF. So as you look at this one, it's $24.00. And you can come down here and you can read this, and it's pretty much going to tell you that, hey, guess what we do? We bet against the Dow Jones, right? And you can look at it over the first year, it lost 25%. Over the last 3 years, 37%. The last 5 years, 42%. And since 2010, it lost 40%. So why is that? Because the market has been bullish, mean going up. As the market goes up, this loses value. But as the market goes down, this gains value. So for prime example, the Dow Jones lost 272 points on Friday. That's why this is up 4.74%. So you see this, as the Dow Jones drop, as you see over here, this gains value. But as the Dow goes up, this loses. So you guess what? Hey Prince, I don't believe in the stock market. I think it's a bunch of BS. Okay, that's great. I think it's all going to collapse next month. That's great. You can make money off of that, right? So this is something you can invest in. Now let's go back and give you hardcore facts. I don't like to do a lot of talking, so I like to show you guys with charts and numbers and stuff like that. So let's look at the chart over the last max. Let's go back to the max. So over the max, as you can see here, it doesn't take a rocket science to see that this is slowly declining. Why was it so high up here? It was over $300 at one point, up to about $300 in 2010. Why was it that high? Because guess what? The market was doing bad at that time. But then, as the market did better, this lost value, it lost value, it's lost value. So now a switch is going to come where this is going to do again. It happens every about 8 years. So you can see, as the market does good, this goes down. But as the market does bad, this goes up. So this is one way you can buy this, sit in your portfolio to protect yourself against a downturn. You actually can profit. Also, you can trade options on it as well, but I'm not going to get too detailed in that. So another one. You don't want to go to the Dow Jones? I'm just choosing the big one. This one is called SPXU. If you need to stop it and go backwards, you can. This is the same thing, but it does it for the S&P 500. As you can see, S&P 500, it went down 29.91 points. And guess what? This went up 4%, right? So as it went down, this went up. It's the exact same thing as the Dow. This is called shorting, betting against the S&P 500. Another one I'm going to jump into is SQQ. This one is doing the same thing for the NASDAQ. So as you can see, I showed you how you can short the Dow Jones. I showed you how you can short the NASDAQ. And I showed you how you can short the S&P 500. That when the economy declines, these things make money. Well, I'm right at my 5-minute mark. I'm going to go over it a little bit because I want to make sure it's a good video. Still at 5 minutes, but essentially now you have something that you can put in your portfolio and that you can use it to protect yourself. Or if you're somebody that says, hey, the market is going to crap, I'm going to sell all my stock, but hey, you can keep your stock for the long term and you can make money in the short term by betting against the market. So I hope you guys enjoyed this video. Hope you guys learned something. You got any questions or concerns, don't forget to drop them below. Give me a thumbs up if you like the video. Give me a thumbs down if you don't like the video. But if you're going to give me a thumbs down, let me know why. But I don't have a lot of time. Until the next video, you guys know what to do. Be safe.